Yo, 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 yo. Yo, 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 yo. Yo, guys. Um, nice Sunday afternoon. Just gonna show you all the weekly review. Just a weekly review. So this is the end of week 4 of June. I took one trade this week. This is my new model. One trade, one 2 hour trade for the week, and I'm done. So I'll show you all the main components of the setup, how I took the trade, why I took the trade, and well, obviously you can see the outcome here. So I remove all of this and go up to the daily. So as you guys would have seen in my weekly outlook, price came down to a key weekly level on Euro USD. So I expect price to move to the upside. We also have a weekly swing low forming here, which is wonderful. As you can see in the past, once a weekly swing low is formed, we have a decent, at least 3 weeks of movement away from that price point. So we have this weekly swing low formed. Just to let you all know, in these videos I also add nuggets just for like future outlook. So here we have a weekly swing low, one up week. We could easily expect at least 2 more weeks back up to this high. But back to the setup of this week. So when we showed up to the charts, as you would see in the previous video on this playlist, price made a swing low here. We have a low with two higher lows on each side, and Michael or ICT taught this concept in his Went series. So throughout the Went series, what every new and aspiring trader should know, it's on his channel, as well as the Scout Sniper series. So those two series, those two playlists would put you in a good position to understand everything that I'm doing. But I suggest you go through everything on his YouTube channel because his content is pretty layered. So we have this swing low form here, and you see price made a higher high right here. Price made a higher high here, and we expected some level of movement to the upside. I expected price to fill this gap. I still expected to fill this gap. Um, Price filled this gap here already. This is a nice gap that was there. But in terms of our setup, this down candle became our order block. So we expected price sensitivity from the high down to the mean threshold. So the mean threshold is body of the candle, the 50% level of the body of that candle. So that was my mean threshold. However, I rounded up a bit. Or I think I did the calculation. Yeah, I did the calculation on the high, which wasn't correct, but I mean, we were just off by a few pips. So once price comes down to this level, into this zone, once price came down into this zone or this specific level, the main threshold, I would have been a buyer. But for additional confirmation, I wait for the H4 to line up with the daily. So the daily was confirmed bullish, and here we had price making a higher high. As you can see when we switch to the line chart, price made a higher high, and once price made a higher high here, we expected the return to order block. So this could have been considered an order block, or here, as you can see, this was the order block we would have focused on. Extend that line out. So that's the H4 order block. As you can see, the precision price comes down to that order block and then moves to the upside, but I didn't actually catch that move. I didn't catch it from there. You don't need to have the perfect entry. So the only support level I had was the daily mean threshold, because obviously it's more powerful than the H4 order block, but you could see the precision you could get. So the daily and the H4 were both bullish. So what I look for once the daily and H4 bullish is the H1 to be bearish, and it comes to your specific, well, my specific support level. So I expect, if I'm bullish, I expect a bearish move down towards the key support level, and then once price hits that support level, I look for a break in market structure, return to order block. So as you can see here, price made lower lows and lower highs. If you look at the swing points, and when price hit this level, I was on the alert for a hourly break in market structure, return to order block. So this is a swing high here that the indicator didn't pick up. So this is why it's important to actually pay attention to price action. Price action is very detailed. Be very detailed with your analysis. Be specific. Be very meticulous. And this is not hard, guys, because there's an hour between every candle being painted. So you show up to the chart. This is 1 hour, then you wait another hour, you see this, you wait another hour, this candle paints. So it's a slow and steady process. So you have the time to be meticulous. You have an hour between every decision. So you have this swing high formed here, and you see on this 9 a.m. candle, price breaks that swing high. Once we have that break in market structure, the swing high being broken, because you see we had a close above the high. All the other times price would have wicked up, but price didn't close above the high. So you see we had this break in market structure, and we focus on the last down candle before the move up. Now this was a possible order block. As you can see, we would have gotten in. However, this is the nicer candle for me. I prefer, as you can see in ICT's videos, the preference is always for the larger candle in terms of volume. So this would have been our entry. I entered a bit before for spread purposes, and yeah, price moved up 53 pips in that one session, and if you held for longer, you'd have been able to get, I believe, like 60 pips, 60, 70 pips. Yeah, 70 pips exact. That was just my one trade for the week. I had my stop loss below these lows. Around 50 pips was my stop loss. But I believe with the trade management, I was able to get a little bit over 2R. You could look at the previous video. I honestly can't remember. So that was my trade for this week. We could even go down to the 15-minute chart and get a way better entry, but I prefer the H1 chart just for extra confirmation, as well as I'm just way calmer with the H1. So as you can see here, we had a break in market structure. We had a close above this, we had a higher close. So this was a higher close above this high right here. Pretty close, so you have to be meticulous with price. This high here, price closed above that high. So our focus would have been the RTO back down to this order block. So you could have gotten in somewhere here with a pretty tight stop. I'm just going to show you all the precision. I would have honestly opted for this order block because it's bigger than this. Stop loss right below here, 15 pip stop. Or you could do the standard 20 pip. Target these equal highs. Let's see if you'd have gotten 3R. Nah, you wouldn't have gotten 3R in one day. That's why I like to have 2R, just be in and out in one day, no stress. So yeah, that could have been your entry as well, but I held for a bit longer because I entered here. So yeah, that was my setup for this week. One setup, one shot, one kill. Keep it simple. And just to show you all why I love this model so much, because you could allow compounding interest to do the hard work. Just allow compounding interest to do the hard work. You focus on one setup, one day for the week, one session for the entire week, and you'll be good. So let's just hypothetically speak. You have mastered your psychology, you have mastered your entry system. One shot, one kill per week, and you are able to go to a prop firm. I'm not gonna call any names or suggest any prop firms. You go to a prop firm and you're able to manage 400k in cap, right? Let's say your target is 3% weekly. So to achieve 3% weekly, you have to do 1.5% risk, 2R. So you risk 1.5 to make 3%. So that one shot for the week, you hit your target of 3%. Let's say you trade 4 weeks for the month, that's 12% per month. Let's say you trade 10 months for the year, you don't trade in January, you don't trade in December. This would be a total after 1 year, but let me show you a better website where you could get the profits. This is just to show you all the power of compounding interest. And you don't need to do much to do well in this game, you just need more capital. So let's say a 10-month period, and we gain 12% per month, which is pretty astronomical, because 6% per month doubles your account annually. So you'd have done 210%. Oh, sorry, let's do 10 months. You'd have done 159% in a year, just one trade per week. And hear me out, guys, it's very possible to have a 100% win rate if you wait for one trade off of a daily level or a weekly level or a monthly level, and you only look for 40 pips, 60 pips, nothing too extravagant, 1 2 hour trade. It's extremely possible to have that. Imagine the psychological impact, the psychological effect of having little to no losses, working only 4 hours a week, and your profit is over $500,000 a year. And this is assuming that you don't engage in other prop firms. Let's say after 2 to 3 years, you're able to manage $1 million in cap. Same system, same one shot, one kill, risking only 1.5%. We haven't turned up the risk dial yet. And you're easily making 1.5 million a year. It's really possible to manage this amount of money over a 3 year period, even less, once you go to prop firms. And doing one shot, one kill per week also allows you to go to investors and say, yo, I only expose 1.5% risk on a weekly basis, whereas you might have other traders who would take, let's say, even 2 trades or 3 trades a week. The average trader who takes 2 to 3 trades a week and he only risks 1%, he's still exposing his account to 2 to 3% risk on a weekly basis. I'm only exposing 1.5% risk on a weekly basis. In addition to that, this game is 80% psychology. Let's say, well, not let's say, it's actually a fact that when you take a winning trade, your ability to make decisions on the following trade is not as good, because you're more of in a euphoric state. Your perception in the market shifts a lot. So yes, it's not an extremely tangible risk, but every time you make a decision to enter into the market, every time you utilize your brain power, every time you utilize your analysis skills, you are exposing yourself to a loss, because your perception is not as clear cut as the beginning of the week, when you just show up to the charts fresh after the weekend and you just have to focus on this one trade. Put all your energy behind one trade, 1 2 hour. If you want to tweak it, you could even do, let's say, 3 hour or 2.5. Let's say you go up to 3 hour. Let's say you tighten your stop a bit and you do 3 hour, risking the same 1.5%. You'd be doing 4.5% per week. And let's say you trade for all 4 weeks, that's 18% per month. let's go back down to the 400k just to make it a bit realistic, because it's very possible to manage that within 1 year. You'll be making easily 1.6, a bit over this. Obviously, the prop firm will be taking some of this money, but just think about this, guys. One session for the week you trade, and you're able to achieve this income with little to no stress. You're not in the markets every day. You're not stressing out yourself every day behind trades that you're holding or behind trades that you're considering. You just find one setup, you wait for price to get to that entry point, take the one trade, and you're done for the week. That model works best for me. I suggest it for anyone, because at the end of the day, this game is about consistency, being able to feed yourself, feed your family, take care of yourself, sustain a lifestyle. I'm not here to look cool, catch pips. I'm not here to do that. I'm here to make money. And if I'm able to execute at a high level, 1 day for the week, one session for the week, and make over $1 million a year, keep in mind this your account balance is going to go up every year for the rest of your life. Your account balance is going to grow as long as you stick with this, as long as you are consistent. Your learning curve is reduced because you're focused on one thing. You're focused on one thing. you know. So that's just my 2 cents today. I like to add small nuggets in my videos, just to help. Oh, come on, the numbers were skewed. The numbers were skewed, but you guys get the gist. You guys get the gist. So yeah, guys, this is my new model. One shot, one kill per week. I follow 2 pairs, um, three, depending on how good the markets look for that specific pair. I'll do a quick rundown on a few pairs, and I'll decide which ones look the best, and I'll just focus on those. So yeah, I spoke a lot in this one, but honestly, this game is 80% psychology, 80% mental, 80% money management. Um, so this one is a major key, and I hope it was helpful. And I wish you guys a good week. I'll most likely be doing a weekly outlook on Monday. I'll probably be leaving the markets to do what it does on a Monday, and then just trade Tuesday, Wednesday. NFP week this week, so be careful, guys. No trading after Thursday. Wednesday is a push. I might just trade Tuesday alone. But yeah, guys, have a good week, and we'll keep in touch.